Well, as we've been talking about, these Tesla shares indeed riding higher. The latest inflation data coming in cooler than expected, leading the Fed to potentially take a rate hike off the table. This would come as car companies like Tesla have seen significant impact from higher interest rates. For more on the road ahead for the EV giant, we've got Oppenheimer senior research analyst Colin Rusch joining us today. Colin, thanks for being here. We have seen, some recovery here in Tesla, but again, there's a bit of a dichotomy, right? Because Tesla itself, the company, has indicated that things are slowing down a little bit, right? But on the other hand, we're seeing some rate relief. So how should investors be thinking about it?
We're really thinking about this just as some relief just on the stocks, not necessarily on the overall demand profile for EVs. We're really going through a rationalization of the EV supply chain, and I think a market product fit optimization here. And so we're seeing some of the companies go through an evolution of their product offering, and Tesla specifically is going through what we think is a pretty challenging situation to grow at scale and to take market share at scale, because there are real losers now as they continue to take share from here. And we think they really do have a compelling technology platform and cost advantage, but this is really the hard work of industry building and disruption that the company's going through here. And so the stock movement today, I think, is more reflective of positioning in the market. We saw it with the solar names and a number of the higher volatile names or higher beta names that we've got in our coverage universe that specifically have rate exposure on their end markets.
And Colin, earlier today, I had the chance to talk to Cathie Wood of ARK Invest. Tesla is the third largest position in the ARK Innovation ETF. And I talked to Cathie a little bit about, she basically said it's positioning reasons that it's now fallen to that level. She is still very confident in Tesla. And I want to get you to react to what she said. Listen up.
All that Tesla's price cuts have done is offset the interest rate hit. So really, the monthly payments haven't gone anywhere. Tesla will continue to cut prices because it can. Its technology costs are falling, and it's profitable. GM and Ford pulling away tells us Tesla's market share in our 5-year investment time horizon is going to be higher than we thought.
So I guess the question, following on that, Colin, is how is Tesla positioned versus its competitors, all of whom are grappling with, the rate environment and financing costs, et cetera? Is Tesla in a better competitive position?
So we think they're in a great competitive position from a technology perspective and a cost perspective, where we feel like it's a little bit challenged in her thesis, because she's basically arguing that they won't have to raise prices or they won't have to lower prices to stimulate incremental demand because folks are leaving the market. And we would disagree with her a little bit on that. I think the landscape is changing. I don't see GM and Ford as the primary competition. We're looking at VW and Hyundai as the established OEM leaders in the space, and then companies like BYD in China is the real competition for Tesla over time. And so the worry for us and why we're on the sidelines here is that we think margins are going to be lower for longer than a lot of folks, and that margin expansion story that she's talking about is not going to be necessarily viable, because taking market share means putting folks out of business and taking the market share from them, and they have to get to a price point where they're offering a better value than their competitors on existing vehicles. And what we're seeing in the U.S. is that adoption on EVs is just a little slow because there is a bit of a mismatch on products and market.
And Colin, we had some analysts on the show who were arguing, the UAW getting the deal done with the Big Three, and some of them came on, Colin, said that was a win for non-union Tesla. Is that how you saw it?
Yeah, absolutely. I mean, certainly there's going to be an effort to unionize Tesla factories and all the battery factories that are serving the vehicle market. But for now, it's certainly an advantage for them, and certainly an advantage versus a lot of the larger internal combustion engine vehicles that are on the market. And so, that labor content ends up being, a meaningful delta in terms of this price environment. So we do see that as a tailwind for Tesla short term. I think there's a much larger challenge around labor and labor pricing in this country, especially as we go into increased automation in these factories. And I think there's going to be, an ongoing conversation, both politically, but also in the business world around what's the right price for labor and what's a living wage for folks.
Colin, switching gears, I got to ask you about the Cybertruck, and notably the headline that somebody uncovered yesterday in the Cybertruck purchase agreement, that if you try and resell your Cybertruck to somebody externally in the first year, that Tesla can try and claw back what you make on it. Josh and I don't read auto purchase agreements, but I assume this is pretty unusual, yes?
Yeah, I haven't seen that before in my life. It's an interesting data point. I think a lot of the folks that are buying, the Cybertruck here in the early edition really are buying it for themselves. That they're not traders in that way. That it's a concern for Tesla is interesting. I think they're a little worried about their backlog eroding. Then that's the only real takeaway from that data point. And so I think what's going to be interesting for the company is getting the volume and getting these vehicles out on the road and seeing how they're really received by the owners once they're out and driving them. And we've seen, the early adopters in Tesla historically be really enthusiastic about the products, but once you get a little bit deeper into the demand curve, there's a little bit more of a mixed response on some of the service and some of the performance. It's the first of kind vehicle with a lot of innovation. They're certainly going to run into a little bit of friction, and it'll be interesting to see how this plays out. But I think they're definitely doing a little protection here with that clause, and it's highly unusual.
Thank you for confirming. We suspected as much, but we didn't know for sure. Certainly, it's highly polarizing before it even hits the road. So we'll see how it turns out. Colin, Rusch, great to catch up with you as always. Really appreciate it.